I've been sitting over here in the media corner, and I've seen, a lot of our speakers come through today, and I saw you and Ryan from Visa, I saw Tim come in, and everyone is friends. Isn't that nice? Everyone is friends.
Payments is a small community.
And you can joke with each other, but it wasn't like that a few years ago.
No.
It went from enemies to frenemies to looks like friends now. And it's been this amazing proliferation of partnerships where everyone is benefiting. You've been a big part, PayPal has been an enormous part of that. How did that come to be? What was some of the decisions you made to decide to partner with banks and the credit card companies to work together? And do you think that was the right decision?
Yeah. So first of all, thanks for inviting us to be a part of this. It's nice to see everybody. I think the reason we were always partners with the financial institutions around the world is that we drove a lot of volume through our digital processing and the scale that we had. But the reason we were also seen as against the financial institutions is that traditionally PayPal would steer customers to low-cost instruments to help our business model, which was traditionally Bounce or ACH. That was good for our business model, but it really confused our customers because they wanted to oftentimes pay with their credit card. They wanted to basically use their digital wallet like they use their regular wallet. You just decide what they want to pay with every single time they make a transaction. And so the most monumental decision that we made at PayPal was offering a thing, what we call customer choice, which was basically for every single transaction, basically present to the consumer, here are all the different ways you can pay for that. You choose. Once we did choice and stopped steering customers, which I don't think anyone ever thought we would do, it really opened up the potential for us to partner across the entire ecosystem, and that's what happened. And I think you see the affection that we all have for each other because we've become great partners. It really is kind of how do we become allies in the war on cash instead of battling each other needlessly so. And I do think, Deirdre, one thing that is a really interesting concept that I think as you think about the era ahead of us, the digital era in front of us, I think no one company can actually serve consumers the entirety of the value proposition alone. I think what we need to figure out is how do we take our platforms, and we're all becoming platform companies, and how do we kind of take the best of the assets of one company and the best of the assets of another company, put them together to hyper-serve consumers that neither of us could do alone. It's complicated because there are control issues and financial issues, but if you can do that well, all companies and all consumers can come out ahead.
Right now, Brad, talking to you, I consider PayPal the old guard of fintech.
Wait a minute.
They're the middle guard.
Thank you, Brad. I guess of the digital age, right? And I realize we have some very old banks in the room, so it's funny to put it that way. But I do think of you guys as sort of the old guard, and Brad, you're very much the newcomers to the world of payments, and certainly crypto has been on a roller coaster. When you hear
Brad is the best dressed in the entire room right now, so I just point that out.
I like, by the way, you're in San Francisco and you've kept it formal.
Well, when you're the small company and you're on stage with the big company, he can wear cowboy boots. I'm going to wear, we're selling to banks. We're trying to impress the banks.
But I thought, the banks are supposed to be, attracting you guys, right?
Well, it's funny, actually. It is a small digression, but sometimes we have meetings with senior people at banks, and they'll be coming to our office, and so they'll dress down. They're coming to our office, so we dress up, and we just miss each other. And
so are they the ones wearing Patagonia vests and Allbirds sneakers,
exactly.
And you're the one in suits?
Exactly, yes.
Okay, but talk to me a little bit about the evolution. You're sort of at the beginning, it feels like, of this journey in terms of cryptocurrencies and the roller coaster that they've been on over the last few years. Where do you expect them to be a few years from now? And if I asked you this about PayPal and PayPal's and Squares of the world a few years ago, it would have been a very different picture. Are you surprised by where you are? But first, let me ask you, Brad, where do you think you're going to be? How does this all evolve?
Look, I think that what we've heard on stage today, I agree with a lot of, I disagree with some of. We have payment networks that are not interoperable. I jokingly, but it's actually serious, point out that if anybody here decided, hey, I want to take $10,000 from my account at Wells Fargo and move it to Barclays and have it in pound sterling, the fastest way to do that is to get on an airplane at SFO and fly it there. That's a crazy statement. I mean, another manifestation that I know that, I am a PayPal customer, I'm a Venmo customer. The lack of interoperability is manifested even within that network. And so when Ripple thinks about the future, we're thinking about how do we create interoperable networks in the same way that the birth of the internet of information created interoperable networks of information, and now any of us can access any piece of information from anywhere in the world, yet we can't move our own value from point A to point B. There's lots and lots of examples I can give on that. So when Ripple thinks about the world, it is how do we stitch this together with the same kinds of technologies that are protocols like TCP/IP, the underpinnings of the internet, SMTP, the underpinnings of email, such that we actually can have interoperable networks. I think it is inevitable that we will get there. I believe that blockchain technologies can have a fundamental impact on achieving that. I agree, Tim Sloan is up here talking about how, hey, I thought this was going to take over the world. I mean, look, the internet.
He's not the only one. That seems to be sort of the buzz, amazingly, here is that, there's not a huge amount of use cases yet. So what is the tipping point?
The payments use case is very real, and it is alive, and it is working. We have announced we've signed over 200 financial institutions around the world, and there are billions of dollars that we are moving through Ripple's technologies. So, I mean, on the global scale of cross-border payments, which is measured in trillion, it's still early. But, look, even the markets are, the crazy crypto markets, it's still early. And so I'm not surprised by the volatility. I think you're starting to see some of that wash out with the supposed crypto winter. I think that's healthy for any market when you get ahead of itself. There's a lot of hype and a lot of, frankly, BS use cases. But the payments use case is very real, and it's certainly we're having a lot of traction in the market.
How does your business fit in when it is interesting you say that, because you look at JP Morgan, where you had Diamond saying that he thinks Bitcoin is
a fraud.
A fraud.
And then he launched a coin.
Yeah. And it sort of reminds me a little bit of PayPal's journey too, the sort of contentious relationship with banks and the credit card rails. So are you seeing this shift happen? And again, like, where is this 5 years from now? Are you able to exist in a world where the JPM coin exists and other banks have their own forms of cryptocurrencies?
Look, the JPM coin, I think, actually, in many ways, has been great for the industry because, someone who not that long ago was saying Bitcoin's a fraud is now leaning in, and it was a macro good thing for the industry and bringing credibility. I'll give it a thumbs up. The JPM coin, though, if you really think about it, and there's a lot of banks represented in this room, is Wells Fargo going to use the JPM coin? Probably not. Is B of A going to use the JPM coin? Probably not. And so are we all going to have a Wells Fargo coin and a B of A coin? And now what about the interoperability between these coins? The other thing that makes no sense to me, in order to get a JPM coin, you deposit $1 in a JPM account, so it's one-to-one backed in dollars, and you can only use it intra JPM's ledger. Why didn't I just use $1? I actually don't understand what problem that was solving.
I think you're illustrating why there's been a lot of skepticism in crypto and the blockchain right here. And it's not that people don't believe in it and that it has a very useful case. It's just that it hasn't picked up in a significant way when, as Tim said, thought it might have changed the world by now. And
Yeah.
Dan, are you surprised by that? Speaking of PayPal, you guys used to actually process Bitcoin transactions, and now you don't.
Yeah. I was waiting for you to say more, Brett. Because literally every time I listen to Brad or Chris Larson before that, I learn a little bit more. Because I do think a lot of blockchain and crypto it's more complex and complicated than like most people do at its surface level. I do think that what was unfortunate with blockchain is that everybody immediately associated with crypto, and I think actually, and I never met the inventors of this, although someday I hope that I get the chance to. That I think what they created through crypto was a incentive mechanism to embed blockchain as a protocol. And it was only the first application was this crypto. And I think because there was a limited amount, it would grow in value, and it was a great incentive structure for people to want to embed blockchain as a replacement protocol, because protocols in and of themselves aren't that sexy. Most people wouldn't like spend their time trying to implement a protocol, but if there's a reward mechanism for it, that works actually quite beautifully. So I think that the reason we started to accept and then didn't accept crypto, although we are now working with Coinbase and others to allow for the transfer of crypto into fiat currency, is because it was so volatile that many merchants who operate on a quite a tight margin couldn't withstand the swings of the volatility, and therefore had to immediately take the crypto and translate it into fiat currency and pay a fee for that. And so the efficiency that was promised with crypto and blockchain was obviated by the volatility. And so as that volatility starts to even out, and you're seeing things like stable coins or digital currencies pegged to a fiat currency to try and stabilize that, which is what I think some of these banks are trying to do, is take the volatility out and therefore allow for more payments type of transactions through blockchain.
Brad, do you think, though, it's important for companies like PayPal to be experimenting with Bitcoin? You look at Square, which reintroduced it back into its system, and it's not making up a huge amount of volume, but they're gaining experience, and they're letting their customers play around with it.
Well, I'm probably going to answer that out of both sides of my mouth. I mean, on one hand, I thought it was interesting, again, having watched some of the earlier panels, Tim Sloan from Wells Fargo was saying, hey, we did this experiment, we did one transaction. I'm kind of like, well, that, the hype is ahead of the reality in lots of parts of blockchain, but there are real use cases and real things happening. I feel like doing one transaction, you're kind of like, wait a minute, that was just, that was an academic science experiment. On the other hand, I look at what's happening, and despite the fact that I agree with the idea that the hype has been ahead of the reality broadly, that's largely because I think these technologies have been in search of a use case. Like, one of the problems with Silicon Valley is you have technologies in search of a problem versus here's a problem, let's bring the right technology to it. I think the reason why Ripple has enjoyed a lot of traction, a lot of success, is we focused very clearly on a real problem around cross-border transactions. It's a massive industry. It is, I was on stage with somebody from the World Bank, and they're talking about the average remittance cost today is 600 basis points. And then by the year 2030, they want it to be 300 basis points. I happened to be on stage right after him, and I said, look, if we only get to 300 basis points by the year 2030, we have failed massively. And one shared passion that I think we have with Dan is, I do think if these technologies are successful, you're reducing friction and you're bringing people either that are underbanked or unbanked into the financial community in a way that they can't be served today profitably.
I'm glad you bring up the example of cross-border transactions. I have a lot of experience with this. I'm Canadian, so I'm constantly moving money around. I've lived in other parts of the world. Why can't I today be able to do that immediately? Full disclosure, I use a company called TransferWise, another great fintech company, because they have the lowest rate, even more so than any bank that I could go to. But why can't we do that right now? You make it sound so easy.
Well, it's not today. I mean, one other small digression, which you'll both be amused by. I was meeting with the CEO of one of the large banks in Canada. His daughter was a student in Chicago, and he was going to visit her that weekend. And he said one of the things he's doing is taking cash because he couldn't easily. He's the CEO of one of the banks. Like,
couldn't easily do it.
Right. Correspondent banking. It was built decades ago. It hasn't really evolved. It's based upon swift messaging between correspondent banks. The cost of supporting that infrastructure, frankly, has gone up. One of the things that changed after the financial crisis of 2009, 2010, it used to be if the Bank of Dan and the Bank of Brad wanted to do cross-border transactions, we'd have what's called Nostro Vostro accounts. It used to be that when I put cash at the Bank of Dan, that counted positively towards my capital ratio. After that financial crisis, we decided that trusting other deposits at other banks may not be as trustworthy as we thought, and so now it doesn't count. And so banks have contracted. The correspondent banking relationships have gone down by 50% in the last 15 years, yet global cross-border transactions continue to grow. So our view is, look, these are technologies from decades ago. We can upgrade them with today's technology, with the internet-based technologies, and make this real-time transactions.
Yeah, and talking about upgrading, these technologies are not even upgrading, it's just putting a more interesting, practical UI on top of it. I think about Venmo, how P2P existed for many, many years among the big banks, but they couldn't get together until Zelle. And I still remember, I think Zelle was launched during, an huge Apple event. So it didn't even get much press coverage, but they didn't really care because they had all the users already. How does that feel to you? That worked on Venmo, it's become such a success. And I think last quarter, the amount of transactions Zelle did was nearly double the amount that Venmo did. They can just turn on the spigots and surpass the transaction volume on something with Venmo, which PayPal worked on for years and brought a lot of people into this ecosystem.
Yeah. Well, I think P2P is a gigantic market. I don't think there's going to be any one player who's going to take all of that market share. It'll be spread across different segments and in different ways. And I think Zelle's done a fantastic job. I think Venmo will probably do close to $100 billion in volume this year. Last quarter, we grew Venmo, I think it was 80% year over year. So I'm feeling pretty good about the growth of Venmo, and I think Venmo for a certain demographic.
Okay.
Because if you add the PayPal P2P volume in with the Venmo, it's actually the largest P2P player. But if you just look at Venmo for the millennial demographic, it's the way that they manage and move money right now. And it's really because it's less about a payment than it is about sort of a social experience. You feed it into your social network, you tag everything, you share everything. And so it's, we've spent like $4 of marketing on Venmo, which was a wasted $4. Because it's a viral component, and it's growing every quarter. We have a record number of net new actives that come on.
And I think you're touching on a really important point is the audience and the market that it's addressing,
Exactly.
right? Is the millennial and now Generation Z audience. But the growth, I won't argue with you there, has been amazing. Profits have been a different story, and it feels like PayPal has struggled somewhat. And I wonder if it's not
I'll
about...
take his struggles.
Yeah, your struggles are a different story. We'll get to them in a minute.
Oh, good.
Don't worry.
Something to look forward to.
I've got some for you. I think you already brought it up, the crypto winter.
Be ready. Just,
All right.
take a drink of water or something.
You can help me bring up Dan's struggles if you want. So is it about P2P payments, or is it about this market of millennials and Generation Z that the banks have a hard time accessing? Many of them, I think there's been studies saying that they would rather go to the dentist than visit their banks, right? This is sort of the PayPal opportunity to sell them more services or get them within the PayPal ecosystem. How are you doing that? Have you seen that yet?
Well, I think PayPal does have a strong brand. Now that we're working closely with banks, we can bring sort of the best of both worlds to consumers, depending on what that particular segment desires. I do think from a Venmo perspective, I've been very, very careful. I think Venmo is an incredibly precious asset for PayPal. I think there's a certain magic associated with that. And, people talked a lot about when are you going to monetize Venmo. That to me, monetizing Venmo is all about adding incremental services and value. So for instance, we recently opened up the PayPal merchant base here in the US to Venmo users so that they can purchase at a PayPal merchant. And by the way, that gives them more value, right? So they can use Venmo in more places than just P2P. They can now use it to purchase. And merchants pay us just like they do for PayPal. Does a Venmo user go, oh, I just did a monetizable activity? No. What they're thinking is, wow, Venmo's providing more value. We provided a debit card so that, and allowed them to take money from their Venmo account and deposit it into their bank account. instantly, working with Visa and MasterCard and others to go and do that. That was value add, and we charged for that. So I think, we saw just exiting last year from zero, the beginning of the year, practically zero, to the end of the year, over a $200 million run rate of revenues on Venmo. And, we're pretty pleased with our progress there. And I'm going to be careful. I'm not,
Okay.
I'm going to make sure that Venmo maintains its magic.
When I think about Venmo, I think about how sort of Square started with the dongle to bring small, medium-sized businesses into their ecosystem and started selling them loans. And now they have Square Capital and this whole ecosystem. They have a restaurant system. They have the Square Cash Card. Could you do a similar thing with the market for Venmo? Could you start offering loans to, student loans or the whole scope of things by using that data? There's been a lot of talk about data, and I think you're collecting some very valuable with the data with the market that you address with Venmo.
Yep. Well, I think part of the secret to PayPal's resurgence is that we have done that. We have expanded, and the way that our strategy was 4 or 5 years ago is that we need to go beyond being just a button on a website, but really to be an underlying platform that helps merchants to power digital commerce, the advent of mobile commerce that's blurring sort of the distinction between online and offline. And today we offer a tremendous number of services and products to merchants and to consumers that go well beyond just checkout. Data and information help power some of that. We're probably one of the top 5 lenders of working capital to small businesses now. As Tim and Ajay were discussing on the stage, we don't ever look at a FICO score when we decide to extend that credit. We look at their history with us and then opt to make that loan or not. The interesting thing is when we do loan working capital to a small business, on average, their sales go up 22% after that loan versus control group, which is 1% to 2%. So by extending that working capital, and all of us in this room do this, I think we actually are really helping communities, neighborhoods, because small businesses are the engine that drives those. And, I'm proud of our part in that. But I think we think of ourselves today as a platform, not a product company. And that's a large part of our growth is based on that definition and that extension.
Okay. Brad, let me turn the spotlight on you. You said you wished you had some of these problems, and there's a lot going on in your space right now. What do you see as the biggest challenge? What keeps you up at night?
Well, I'll touch on, because you mentioned it, people talk about, is this the crypto winter? I don't know if it's spring, summer, winter, autumn. When Ripple thinks about what we're doing, we've had more momentum in terms of customer sales. I think we signed about 3 production contracts. And again, these aren't experiments. These are production contracts per week in Q1. It was a record Q1 for us. 2018 was a huge year for us. So, I look at where we are with blockchain, and I think the hype got ahead of the reality in terms of just people talking about, provenance and even identity, which was discussed up here on the stage earlier. I think is a really hard blockchain problem that no one company is going to be able to tackle. But I think that focus has put us in a position of lots of customer momentum, and I'm super excited about 2019. I do think there's going to be more M&A. I think anytime you go through this kind of, crypto winter trough, you see people kind of get flushed out, and you've seen layoffs in the crypto space. I view that as a healthy part of a nascent market growing, and but I think it'll force real utility and solving a real problem.
Brad, do you think that? Sorry, can I ask a question, Brad? Do you think that the different blockchains are going to come together when you say that there's mergers? Do you think the Bitcoin blockchain and Ethereum are going to start to?
No, I was thinking more about there are a lot of companies that have started.
Yeah.
Although I think what his question kind of the underlies is, there's something like 2,000 different tokens and by definition underlying blockchains. I think 99% of them go away.
Yeah.
I think most of them, 99% is kind of a random number, but if we ended up with 10.
It's a big number.
Yeah, and the vast majority are going to go away. And I think it's because a lot of them were created with either an unclear use case or a use case that hasn't proven out. And you already see that to some degree because there's no liquidity. And ultimately in the digital asset space, liquidity is critical to the success. And so, we have been fortunate to build our technologies on something called the XRP ledger, and that's done well.
Is the aim still for it to be sort of a store of value so that people can spend Ripple one day? Is that going to happen? Because even at the
XRP,
height, right?
Not Ripple. You'd spell it XRP. I mean, one of the area where I think Dan and I actually agree is, people talk about these things as currencies, and in some ways they're currencies, but I don't expect to go into Starbucks anytime soon and use XRP or Bitcoin to buy my coffee. The dollar works pretty well. My Visa card works pretty well. My PayPal account works pretty well. I do think in some markets, and I would point to a market like Argentina or even Venezuela, where the consumers, citizens of those countries don't necessarily want to hold the local fiat. And you may see inroads in markets like that where these things as currencies start to spread. But when we think about what Ripple's doing, we're using these underlying technologies to grease an engine that needs a lot, can greatly improve based upon speed and cost, how value is moving around the world. But for us, that's an infrastructure layer, not a Starbucks layer.
Right. So when you say not anytime soon, is that ever going to happen? Is that what you hope to see?
Ever's a long time, but I don't think in the next 20 years the dollar. I mean, in effect, people are saying, the question says, is the U.S. dollar going to be replaced by Bitcoin, Ether, or XRP? I just don't believe it. I think other currencies around the world, that's dependent upon those markets. And in some ways, there are governments who already lost control of their fiat, but that's not the first world dynamic.
One last topic I want to touch on while we have a few minutes, and this has been discussed here, is the divide of the way that tech companies are operating in China versus what they're doing here. And Dan, when you made that decision, I think it was in 2006, to partner with the Visas and the MasterCards and the banks, you were giving up something. You were giving away a piece of that transaction. Do you look at what Alipay is doing now and think we could have done that? We could be so much more profitable right now. Or do you think that they're just going to stay as sort of, Ajay and Tim spoke about staying their corner in China, which is a very big one. How do you think about what they're doing and in terms of disrupting this huge process that has, 100 players?
I just came back from China yesterday. I had a
Did you use cash?
What's that?
Did you use cash?
No, I didn't use anything, basically. Came in and out. But I've used WeChat Pay and Ali and have spent time with their respective CEOs and know the system well. So first of all, I would make that same decision that we made over again, in complete hindsight, again and again. I think a lot of people want to extrapolate the Chinese experience to other markets, but you have to remember, they came from a completely different place. First of all, they did not have an embedded point of sale system in place, so very few of the merchants accepted credit cards. They didn't have really a large credit system in place, and so QR codes came naturally. And by the way, Ali and WeChat Pay battle for those merchants. Don't assume that they're profitable on that because they are battling for market share inside China right now. And so every country, this is the fascinating thing about payments, is different. Germany, Japan, very different thoughts about credit than we have here in the US. China came from, leapfrog. You look at Africa, and it's a little like telephony. They didn't go from no phones to wireline to wireless. They just leapt right to wireless. Same thing's happening in digital payment. You look at Kenya and others, I forget, something like 40% of the GDP is moved through M-Pesa. So every country is different, and as when we look at the world, we don't look at a cookie cutter approach at all. We look at country by country. What is the right value proposition to put out into that marketplace? And so I think The Chinese market is probably the most developed market in the world around digital payments, to your point. Doesn't matter where you go, you really don't use cash. Like you go into a lot of the stores, like things like shopping carts, like they don't even know what that is because they're just scanning and having it delivered.
Yeah.
You know, there's no checkout, there's things like that. So it's a very different environment, but they have density in their cities, and it's...
I was thinking about Andrew saying that he didn't know how to tip, right, because he had no cash, but in China, right, they all just pull out their phone and give you their QR codes.
And by the way, that's a
exiting.
simple and easy thing for us to do in this country too. QR codes is a really easy thing to do for tipping, for very small businesses, but we have an entrenched point of sale system here. It's going to be very different in the US than China.
Brad, any last thoughts from you as we wrap it up?
Well, to the extent I would comment on the earlier panel, I think there was a comment a little bit like, well, Alipay is just embedding in New York City taxis as a, addressing the tourists. Alipay has grand ambitions in the United States.
Really?
I agree 100% with Dan that each market has its unique.
Do they admit that? I'm not sure they admit that, but you think that that's they eventually want to be a big player in payments here.
I think there's no doubt about that.
What makes you say that?
I'm sure Dan and I both have had conversations with people at both those companies, and I think this is a large economy. They want growth. They think about. I mean, Alipay in particular has been incredibly strategic about making investments and stitching together. They're the largest shareholder in Paytm. They're the largest shareholder in I can't remember the payment network in Indonesia. And they're in some ways they're building their own version of an interoperable payment network, but closed to their world.
Yeah. Well, it's a great point to end on. Thank you both.